Imagine waking up one morning to the news that India has quietly cut billions of dollars worth of US debt from its reserves, and at the same time, stacked up its gold reserves like never before. Now, on the surface, that might sound like just another financial headline. But here's the truth. This move could signal one of the biggest shifts in the global economy in years. And whether you follow global finance or not, this affects every single one of us. Because what India is doing isn't just about money. It's about power, security, and the future of how nations prepare for uncertainty. Before we go further, if you find topics like this valuable, do me a quick favor. Hit that like button and share this video with someone who'd be interested. It helps more people discover these big changes happening in our world. Now, let's break this down in plain English. For decades, the US dollar has been the king of global finance. Countries stored their wealth in US Treasury bonds because they were seen as the safest bet. But recently, India has taken a very noticeable step back. According to fresh data, India's holdings of US Treasuries dropped from $242 billion to $227 billion in just 1 year. That's a $15 billion a cut. At first glance, not earth-shattering. But in finance, direction matters more than size. And the direction is clear. India is moving away from the dollar. But here's the twist. While selling off treasuries, India bought over 39 metric tons of gold in the same period. By June 2025, India's total gold holdings had ballooned to nearly 880 tons. Think about that. One of the largest annual increases in years. That's not just diversification, that's a message. So why gold? Why now? It comes down to two words: risk and resilience. Central banks are some of the most cautious institutions in the world. They're not in the business of gambling, they're in the business of protecting national wealth. And what they've been watching closely is the US dollar's volatility. In just 2 years, the dollar has lost nearly 40% of its value against gold. That's not just a hiccup, that's a flashing warning sign. India's move isn't an act of rebellion against the US. It's insurance. It's hedging against uncertainty. India still has around $690 billion in reserves, yet one of the largest in the world. And it still holds plenty of US assets. But it's making sure all its eggs aren't in one basket, especially a basket that looks shakier with every passing year. And India isn't alone. China has also trimmed its US debt holdings, bringing them down from $780 billion to $757 billion. Even smaller economies are recalibrating, each for their own reasons. Some, like Israel, are buying more US bonds. Others are cutting back. But the global pattern is clear. The dollar is no longer the unquestioned heavyweight it once was. Let me pause here and ask you, what do you think? Do you see this as a smart move by India or as a worrying sign for the US? Drop your thoughts in the comments. I'd love to hear your take and keep this conversation going. Now, let's zoom out a little. For decades, the US dollar has been like the North Star of the financial world. Stable, reliable, the go-to reserve currency. But things are changing. America's ballooning deficits, political divides, and aggressive money printing have chipped away at that trust. In fact, foreign central bank holdings of US securities recently dropped to their lowest levels since 2017. That's not random. That's the world sending a message. We're no longer betting everything on the dollar. So where's the money flowing instead? Into diversification. Into gold, into other currencies, even into sovereign wealth funds. Essentially, central banks are saying, we don't know what the future holds, but we know it won't be safe to rely on just one anchor anymore. And here's where India's role gets really interesting. India has managed this transition quietly, steadily, without rocking the boat. It's not an all-or-nothing move, it's a balancing act. By increasing gold reserves while still holding plenty of US debt, India is showing other nations how to hedge smartly. It's like reshuffling a lifeboat so you're not weighed down on just one side. Now think about the bigger picture. If more countries follow this path, and many already are, the world could shift toward a financial system that's multipolar, not dominated by a single currency. That means trade, investments, and even political leverage would look very different. For the US, this is a warning. The privileges of dollar supremacy aren't permanent. If foreign demand for U.S. debt continues to slide, America could face higher interest rates, bigger challenges financing its deficits, and weaker influence on the global stage. But let's be clear, the dollar isn't dead. Not by a long shot. It's still the backbone of global finance. What's changing is its dominance. Instead of being the only pillar, it's becoming one pillar among many. And gold's resurgence is proof of that. Gold is timeless. It doesn't default, it doesn't get inflated away by politics, and in times of chaos, it shines brighter than ever. India's 39-ton addition this past year isn't just an investment, it's a signal of caution. Now, for those watching at home, it's important to note, central banks operate differently than individual investors. This doesn't mean everyone should rush out and buy gold bars. What it does mean is that the smartest financial institutions in the world are preparing for uncertainty by spreading their risks. That's a lesson we can all take, even at a personal level. Don't overexpose yourself to any one thing. Another fascinating angle here is geopolitics. Reserve management isn't just about economics, it's about strategy. Countries like Israel may increase U.S. bond holdings for security reasons. India, on the other hand, is balancing its historic ties with the U.S. while protecting itself from overdependence. Each decision is part of a bigger chessboard, one that shapes alliances, trade, and even political negotiations. And as the world tilts toward multipolarity, India's proactive approach puts it in a leadership position. By hedging early, by quietly diversifying, India is saying, we're ready for the turbulence ahead. That's not just financial foresight, then that's strategic foresight. The lesson here for policymakers everywhere is clear. Diversify or risk getting caught off guard. Over-reliance, even on something as historically solid as U.S. debt, is a liability in today's world. So, as we wrap this up, let's take a step back. What India is doing right now may look like small adjustments. A $15 billion cut here, 39 tons of gold there. But taken together, these are signals of a new era. An era where the dollar shares space with gold, with other currencies, and with new strategies. An era where financial resilience matters more than blind trust in old systems. And for us, the takeaway is just as powerful. In a world full of uncertainty, flexibility, and diversification aren't just smart, they're necessary. If you've stayed with me till now, thank you. Don't forget, hit that like button, subscribe to the channel, and ring the notification bell so you don't miss future deep dives like this. Your support really helps this channel grow, and I appreciate every single one of you for being part of this community. Thanks for watching, and I'll see you in the next one.